Thanks again for logging in for this, our first Clue Finance webinar. This is a series of 8, and it's basically designed to help you uncover commercial lending opportunities within your network, within your day-to-day clients. But just some housekeeping. Please know that this webinar will be recorded and it might be circulated electronically or posted online. But yeah, like I said, this series is basically put together so that you guys can have better conversations and with your clients and know what sort of clues, pun intended, to pick up on when you're having your conversations with your clients to uncover their commercial lending opportunities. So basically you uncover them, you send them over to us, we get them done for you, your client's happy, you get paid, and it's a win-win-win. So if you haven't already had an opportunity to do so, feel free to jump on to cluefinance.com.au just to learn more or register to become a Clue partner if you haven't already. I'll kind of basically cover this off. So yeah, welcome to Commercial Lending 101. So what is commercial lending? Well, I'll tell you what it isn't really quickly. It's not residential lending. It's not personal lending. It's lending used for any commercial purpose. So whether you're buying or refinancing commercial property, funding for business, whether it's working capital or expansion, etc., buying through an SMSF, or development of more than, say, 4 units where you're relying on pre-sales as your exit strategy.
And I guess just quickly for obviously a few residential brokers online here, it's not NCCP, so it's everything outside of that, guys, which is obviously important in terms of how it's assessed and the requirements we've got for the commercial lending as opposed to resi. So what Eamon just touched on leads well into this next slide. It's all about the lending purpose. So if your purpose is, was it 51% or more, it's as commercial, it's going to be classified as a commercial loan. So like the slide before it, basically it's for purchase or purchase of commercial property, offices, warehouses, shops, etc. Refinance of the same, anything in an SMSF. It sits outside of the resi space, so we consider it commercial. Whether it's purchasing residential or commercial property in an SMSF, still sits it outside of that residential space and comes into this commercial ecosystem. Eamon will touch on what the broader commercial lending actually means, because it's quite a broad area. But any construction or development, land subdivisions where you're relying on pre-sales or don't want to make any repayments during the loan term, that's a very important consideration that makes it commercial. And some banks will even treat residential properties purchased in trust as somewhat of a commercial flavour. But that's really it. Like the lending purpose really defines whether it's commercial or residential. And Eamon, if you wanted to cover off, how wide commercial actually is. Yeah, I think I've spoken to a few of you on the call here before, but like that term commercial, it's pretty broad, and I think sometimes doesn't really give enough context to those that aren't familiar with the space. So just touch on commercial. The things that can sit under that is standard business lending. So any business owner requiring funding to acquire a business or grow their existing business, working capital. It could be trade finance. It could be asset finance. It's obviously property development, and then all those other broader commercial requirements we've just talked about. So the actual scope of commercial is definitely a lot broader than it sounds. We're probably focused on a smaller segment of that, being more this property-backed commercial lending. So what we wouldn't be looking to do is fund business purchases, based on goodwill, for example. We're not doing trade finance. We're not doing asset finance at the moment through this platform either. But property development is certainly one we're looking at, and as I touched on, fully secured commercial requirements.
Cool. So who needs commercial lending? Well, the chances are, guys, you're probably already dealing with clients who may need commercial lending. If you've got a self-employed client, they're probably going to need commercial lending at some point in their business journey. I mean, they're business owners that have got working capital that they need to be mindful of. They may want to purchase the premises that they're operating in. They may be more sophisticated investors that have a lot of residential and now they're looking to diversify into commercial, or they might be, pretty obvious one, they might be a property developer. So like I said, the chances are you're probably already dealing with these people. So it is a very good idea to understand, what they do at a broad level and how you can support them in their day to day.
And just touching on that, guys, and I know a lot of you are familiar with this, but commercial lending is becoming, I guess, individuals are becoming more familiar with it. A long time ago, it probably was less known in the market. I think there's a lot of information out there nowadays. There's obviously probably more people dealing in commercial finance than there were, say, 10 years ago. But as a result, our clients and your clients are more familiar with it as well. So it's certainly something they'll be talking about. And if they're not talking to you about it, they're possibly talking to someone else.
So here are the key differences, guys. So residential, LVR, you can go up to 95%. Commercial, it's more like 50 to 80%. And there is scope to go a little bit beyond 80% for certain professionals, etc. However, the traditional LVR, and it's really based on segmentation, which Eamon will touch on in a second. The traditional LVR for commercial starts at about 65% for standard commercial property, which will cover off later in the preso. But traditionally, 65% is where it started. 50 is more for specialized assets, and 80% will get you, for your standard commercial properties in certain segments of the bank, typically in the owner occupied space, but also typically in that SME segment. The assessment focus is very black and white in residential. It's really just down to the income. Can you service, yes or no? With commercial, of course, income comes into it, but they also look at your lease details if it's a tenanted property, and they'll look at your business viability. So not just profit and loss statement stuff. They're looking at your balance sheet. They're looking at, whether you've got good cash flow or not. So there's a lot of other metrics they look at to make sure that your business is viable and you can afford the proposed debt. Loan term, again, you can go straight up to a flat 30 years on residential. With commercial, of late, we're talking in the last, say, 10 years or so, we've seen that loan term increase from 25 up to 30 years. However, you're more likely in the higher segments of lending to see a loan term of, say, 3 years or 5 years. And that's typically because it can be a bit cheaper. So 3-year money is a lot cheaper than 10-year money in the higher segments of lending, which Aim will touch on.
I might just touch on that point now. So with that small business space, guys, that's where you're seeing these 25, 30-year terms. And it's it's very much a residential product branded commercial. Hence the pricing is pretty standardized and they can do up to that sort of tenure. Once you get into that larger segment with commercial lending, as Louay touched on, that 3 to 5 is pretty common because they're using market rates, and then there's a lot of margins that are loaded on top of the base rate to get the all-up rate. If you were to stretch that out past 5 years, you're really going to see the rates start to escalate. So it's very typical to have a 3 to 5 year term, and then it's effectively rolled over. There's like a review period anyway, and then that facility is rolled out again. They reprice it, and on you go. So it's something we're familiar with. Our clients are very familiar with as well. But if you haven't dealt in that space, it is very different.
And if your client hasn't dealt in that space and they're used to residential lending, they might be taken aback and think, well, how am I going to pay off the loan in 3 years or 5 years, especially if it's like $1 million, $2 million loan? Well, that's not really how it works. Typically, they'll be interest only, or they'll give you a notional repayment period, which is far exceeds the term of the loan. In terms of documentation, you'd be pretty used to the resi side of things, full doc, 2 years financials, etc. There may be alt doc options out there in resi still. In commercial, obviously you got your full doc, there's low doc, lease doc. So what low doc is, it's basically assessing a deal based on BAS statements, for example, or an accountant's letter, or a 6 months or 12 months of bank statements. Lease doc really just looks at the lease that that the commercial property is tenanted to, and they'll basically just look at the income from that lease, which makes it very good and a streamlined pathway for a lot of clients. Rates and fees, residential is typically lower, slightly higher on the commercial side, but it's based on various factors. It can be based on the lease term, could be based on the business's viability and the risk grade of the client, which is a whole different kettle of fish because it looks at years of performance and industry, etc. Anything you wanted to add?
Well, just going on that segmentation, guys, for you, because I think this is a really important part. And when you're listening to it, you're probably thinking, why does it vary so much? Well, effectively, that small business space, it really does almost, I guess, try to replicate residential lending in terms of trying to streamline things and follow a little bit more of a policy-driven decision, albeit it's still got some flex. But once you get into that higher space, and I guess segmentation for a rule of thumb, guys, you've got sort of sub $1 million in most lenders will be with a really small business space that they deal with. You've got sort of $1 to $3 million. Now, they do vary. ANZ recently changed their segmentation and have made it more confusing. But as a rule of thumb, guys, sort of that 1 to 3 million space, you've got, once again, a little bit more flexibility around the decision making, but still trying to adopt some policy. And once you go above $3 million in debt, you're in pretty much full commercial lending space as you scale up into emerging corporate. And that's where you get this, what we call judgmental credit. So one of the things I used to say to us in the bank was that policy was there as a guide, not a rule. And what that basically meant is that would give you the framework to make a decision, but then all the other elements would come into it. So the character of the client, for example, their wealth position. That's where, as commercial bankers, we were able to really put a good case behind a good client. And even if it didn't tick every single box like you have to in resi, you could still get the deal away as long as you've got a good story and good mitigants. So, guys, that's why it varies so much. And even then down to the rates, in that commercial space, all of those elements go into pricing it from not only the asset itself, but then the income of the business, determines the risk grade, the profile of the client, etc. So you've got a lot more variables there, whereas in the small business space, a little bit more off the shelf pricing.
All right. So types of security that are available to be used when we're talking about property in commercial. So you've got your standard commercial property, which everyone will be well aware of, e.g. your warehousing, offices and retail are probably the most popular. At the moment, warehousing are probably what we're seeing as being most popular out there that people want to buy. These are considered standard. Then you've got specialised property, which are non-standard. So these are properties that have been purpose-built for a particular activity, and the property can't be easily used for any other purpose. So, for example, a private hospital, a childcare facility, aged care facility, they're all examples of a specialised property, and they will probably attract a lower LVR than your standard commercial properties, as I briefly touched on in the previous slide. You've got mixed-use property. Sometimes you guys might see an old pub that was turned into like apartments. That's not going to be straight up resi property. That's going to be treated probably as a mixed use or a commercial property. Another example of mixed use is where you've got, say, retail downstairs and you've got an apartment upstairs. That's mixed use, and that's probably going to be considered commercial. The old school milk bars that had a house on the back of them, they were commercial as well. You don't see many of them anymore. No. Vacant land, if it's deemed to be highest and best use as a development site, you might sometimes see that clause in evaluation. They'll treat that as a development site and therefore commercial property. If it's already a development site, well, that takes the ambiguity out of it. They'll be deemed as commercial. Or residential property that is standard residential but is being used to secure a commercial loan. Obviously, that's not a commercial property, but that is a type of security that we can use to secure a commercial loan.
Did you touch on the multi-site development as well for resi, where it falls into commercial?
Go for it. No,
I'll touch on that, guys. Just quickly, I know a number of you would have done some construction funding for your clients in the residential space, where you can do 2, maybe 3 properties on one site. And I think there are some lenders that also will go up to as far as 4, but there's only a few. I guess if your client doesn't fit into those couple of lenders that are doing 4 on one title, basically it'll tip itself out into a commercial facility. And like I said, with those banks that are only doing as many as 2, say, townhouse development on one title, those lenders, once again, they'll tip it out. As soon as it hits 3, it goes into the commercial space. So I guess keeping across those particular clients, guys, that you never know, it might be on the fringe, but once you exceed that sort of cap with those lenders, you're dealing in commercial space.
Cool. So just jump into a really quick case study. So I had a client, basically they're an architect, self-employed, obviously. They wanted to purchase, they own their own office unit and wanted to refinance, release some equity. They wanted to do it in a fast track sort of method. They didn't have much time, and their current bank wouldn't allow it. So the referrer passed it on, and we found a lender that would do that for them based on a BAS. And the result was that they got the money that they needed when they needed it, and everyone was happy. So keep that in mind, guys. Like where one bank says no, if you've got a relationship with one bank or one banker at a bank, if they say no, there could be opportunities out there within the mainstream still that would be, providing a streamlined solution for your client. In this case, just one BAS statement. So, you guys, it's very important that you don't need to be, you need to know that you don't need to be an expert in commercial to be able to identify or help your clients with their commercial requirements. All you need to know is the conversations that you need to have, or the clues to look out for, listen out for. You don't need to know every lender's policy. You don't need to know how to structure the deals. You just need to know how to identify them and pass them on, because that's what we do. Our platform is that you just identify the opportunity, send it over, we get the deal done, you keep the relationship and look like a hero.
And as I think some of you are familiar with as well, like we've changed up the referral process. You can do a name and number and a summary if that's all you've got, and we'll happily take that lead and run with it for you. But also, if you've got some more of the details around, say, a particular property that they're looking to buy or refinance, you can enter that as well. Just helps speed up the process, but both options are available to you, and then our team will take it from there.
So this is what you do need to know. Just look out for the cues that client might be inadvertently telling you that they need a commercial lending solution, i.e., I need to buy a warehouse. It's quite clearly, a commercial purpose there, or I'm buying under a company name. Are they? This will further the questioning for you. What are you buying under the company name? It might be a factory. It might be an office. Can I use my business for the loan? Sometimes clients will ask you, questions that they should probably ask their accountant, but it might give you an idea of what they're trying to achieve and whether it's got a commercial or residential flavour. I've got a business renting the property. It's quite clear there. Even if it was a business renting a residential property, it might be, an accountant using a suburban practice, in an existing home, or a physiotherapist in a residential property. These are going to be classified as commercial lending, or commercial loans rather. I'm putting it in my SMSF, or I'm building townhouses. These are all conversations that your client is trying to tell you that what they need is for a commercial purpose.
Triggers for that conversation. Yeah.
Right. So
mindful of time to get some Q&A. So
why is this important? Like, the main thing what we're trying to help you achieve here is to strengthen your relationship. What you don't want is an unfriendly broker coming in, putting a foot in the door because you don't provide any commercial lending support. They might also have residential or asset finance in-house, and they open the door with the commercial opportunity. Next thing you know, they've refinanced all the resi. So that's number one. Protect your client relationships. Diversification of income is another one, and I'm sure you've heard that term diversification bandied around by aggregators. It's not that simple unless you've got 20 years of commercial lending experience behind you, like we do. It's not that simple. But what you can do is just listen out for the cues, as I discussed in the previous slide, and you will be able to diversify your income.
And just on that, for those that are potentially going to look at onboarding the solution of commercial lending down the track, I mean, it's time. It takes a lot of time. It's costly, but at the same time, Clue can be a provider of solutions in the interim too. So we know that it's not one size fits all for everyone.
Yep. Especially in an age where our industry is quite saturated with people that are doing very similar to what you're doing. So you're offering more than your competitors by offering commercial, because the reality is not many brokers are offering commercial.
Or expertise to offer.
Correct. Yeah. Whereas here you are offering it indirectly by passing it on. Right, so how we help you win in business, a little bit about me and Eamon for those of you that don't know, 20 plus years of lender side experience, 40 plus years of broker side experience combined. We've been involved in commercial lending from the start.
I had hair when I started.
Yes, he did, and I was a little less great. But through our portal, you'll be able to track all your deals with live updates. Anytime that we make a change on our end, you'll see it in the portal. So you no longer have to wait for a call or an email, or make a call yourself, or send an email, because it's all right there in your portal.
Have any questions come through either on the?
I'm not sure, but we'll have a look in a sec. So, guys, what I'll do, I'm going to send this presentation out. It's got some links to whoever wants it, so feel free to let us know if you want it. I'll let you see, check out those links yourself. You can create your partner portal access if you haven't already had an opportunity to do so on the Clue Finance webpage. Just click sign up. But basically, this, like I said in the beginning, this is the #1 webinar of a series of 8. Our next webinar is going to be how to spot commercial opportunities in your day-to-day deals. So unpack more conversation starters and what to look for in financials, etc. So make sure you check out the next one. Will be sent on your emails and on our socials as well. Now, the Q&A, the fun part. Let's have a look, see if anyone sent anything through.
I got some questions, if I can just jump in.
Yeah, go for it.
Yeah, good session, boys. Just quickly, I guess just a couple of housekeeping ones is, for the next session, is there a link that we need to click to accept to join the next one? Or is it just automatic, like it's part of a series?
No, you'll have to accept it, because the reason is the dates are not yet set in stone. So once we lock the dates in, we'll be sending out, just as we did this time, an email to everybody, and it'll be on our socials as well.
Perfect.
You'll get a direct link to it.
Yeah, you'll get a direct registration link. That's right.
Yeah. The second question I have is just more about when we refer a client over from our side to Clue, we want to make sure it's a good experience, and obviously we're not wasting everyone's time. So is there any form of like calculator or quick calculations we can do just to obviously do a quick, quality check to make sure that it is a lead to you guys before we even get there? Because the last thing that we want is like, hey guys, please have a chat to one of my clients. You look at the numbers do not even work at all. They're not even then close or in the ballpark. So on the residential side, we have calculators that we can run in terms of CC, whether it's in the ballpark. Is this like a similar tool when it comes to the commercial side?
Well, I'll jump in. I mean, really, Anthony, the main thing is our pre-qualifier, to be honest with you. That's probably the best tool you can use for these types of scenarios of loans that we offer through the Clue platform. I guess the feedback we've got is that sometimes these conversations are happening at a point where you may not have enough of the information. Now, I appreciate sometimes there's going to be a lot more to it as well. So short answer is our pre-qualifier that we've designed fits most scenarios, not all. And probably the reason for that is commercial being so broad, it's going to have a lot of moving parts, and there might be some stuff that we identify that will help with the deal that you may or may not be across. I guess to make sure the experience is good, as you said, we're very mindful how we manage that initial intro. So if it's not going to stack up, one of the things that we do, Anthony, is make sure we give some information to the client and yourself around maybe why it hasn't or how you can get there eventually. So we are mindful that sometimes those deals will come through and we're like, hey guys, this is just not going to fly. I think the next thing is to make sure we identify why and give some context to that. I think the thing that we've gained feedback from many of our clients over time is they're okay if it doesn't stack up. It's as long as you tell them why and how they can get there. That's probably the best thing. It's when you just say, oh, sorry, not a deal for us, doesn't work, see ya. That doesn't go down well. So that's how we sort of, I guess, combat that for you, Anthony, outside of the tool that we built into the platform, which is the pre-qualifier.
Yeah, thank you.
No worries. Anybody have any other questions? You got any scenarios or anything like that you might have now, thought about now that we've had this discussion and some of those conversation starters or those triggers that you might have maybe missed or identified?
Or even are you hearing clients talk about commercial more these days than they have? Is that a topic that's coming up? Just in general, that inquiry?
Yeah, I would say absolutely.
Yeah.
I've had quite a few clients, I think, particularly with borrowing capacity being sort of all over the place. I think clients are getting a little bit savvier around, okay, well, maybe it's not just a case of let's just buy a bunch of investment properties in our own names. Is there maybe other ways that we can be sort of putting our capital to work rather than just purchasing it through residential property.
Sure.
So I've been getting quite a few. Yeah.
Yeah, very good. Cool.
How would,
well,
I
there's
guess,
no
the
other
commercial
questions,
lending
guys. I mean,
space?
oh no,
Oh, sorry, I just
go.
got one quick one. How would the commercial lending space view like an equity release against commercial property, but the use is for, I guess, other uses apart from commercial, shall we say? Like, but they want to use the commercial security as, to access that capital, like Luke said.
That's a really good question.
I've got a couple of answers for that, and different lenders, right?
Yeah,
you take this one though.
Yeah, well, I was just going to say, like in the resi space, we still need a clear purpose for the funding, or what is it going to be used for, and that'll typically dictate the answer that you get.
Because one of the terms in the bank, Anthony, that they would always sort of say to us is we don't like to provide walk around money.
Yeah.
Now, we used to be able to do that back in the day when we were in the bank, maybe early 2000s. It was fine. You could do it all the time. You just leverage up an asset. Here you go. Here's $1 million. Off you go. As the way touched on, the purpose is really important now. Obviously, banks are under more scrutiny. You've probably got a little bit more leniency if you go to the private space. There's definitely an element where they're comfortable as long as because their leverage is usually a bit lower and they're so focused on just the quality asset, they're probably more likely to accommodate. If we're talking traditional lenders, though, yeah, a little bit more context around where that money is going to be going. How detailed we can work with you on that. Does that answer your question? I hope.
Yeah, I'll probably have to, whenever we get a scenario, just message you separately just to go through the details, but it does.
That's fine.
Cool.
And yeah, guys,
thank you for the presentation.
Have you got any other scenarios? Thanks for joining us, and hopefully it was useful information. We obviously got a lot more to go through. A bit more detail will come out in the next sort of 7 of the series that we're doing.